Hey guys, Joel Frank here, market analyst at YouTrading, and today we're taking a quick look at the New Zealand dollar, or at least NZD versus the US dollar, because it's been heading lower. There's a couple of reasons for this. First of all, there is the New Zealand dollar side of the equation. You had the RBNZ rate decision last night. They did go ahead with a 25 basis point rate hike as expected. But the other aspects of the rate decision were nowhere near as hawkish as expected. I mean, first of all, there were actually quite a few market participants who were expecting a 50 basis point rate hike, because when you actually look at the economic numbers in New Zealand, like their unemployment rate, their inflation rate, the Q2 growth rate, it's all super strong. So kind of a lot of people felt like a 50 basis point rate hike was justified. So immediately when they only hiked 25 basis points, you saw a bit of an unwind of those hawkish bets. And then market participants weren't impressed basically by the bank's forward guidance on interest rates. They did raise their forecast for where their official cash rate is going to be, but not as much as I think a lot of market participants had been expecting, or as much as money markets had been pricing for. So, I mean, I can actually show you if I go to a 15-minute candle. You can see we had this immediate knee-jerk move lower. That was on the the dovish 25 basis point hike, and then we've pretty much been heading lower ever since. And let's just go back to the 4-hour candlestick. You can see, if I get up the crosshair, you can see that we're now below the 0 spot 69 handle, quite convincingly below it actually. And if I zoom out some more, the dovish hike from the RBNZ kind of confirmed a break below this uptrend. So it started back here in August. You had those tests here in October. We were probing it. Well, RBNZ confirmed the break below the gradual uptrend. And we've pretty much immediately tested the next area of resistance, currently probing this 0 spot 68.75 area, which is these lows here from 6th of October, 1st of October. Then you got the late September lows, sorry, which we haven't quite tested just yet, but probably going to test that soon. And if that goes, it's going to be a test of this low from August, really. And where's that? That's around the 68 handle. So, yeah, all the way down there. And then, you know, if we really zoom out, we have to go back a long way now. And if we broke below that August low, by the way, that's annual lows. Then just below that, at around 0 spot 6790, you got this double top here from back in 2020. But yeah, so as I was saying at the start of the video, it's not just a less hawkish than expected RBNZ that's been driving this cross lower. The dollar has been broadly strengthening as well. We've had a just massive dump of US economic data today, but I think the most important sort of highlights of that data was the fact that initial jobless claims saw a massive fall to under 200,000 in the week ending last Tuesday. That's below pre-pandemic levels. So it's like, wow, the labour market is really hot. You also had another estimate of Q3 GDP growth that was like pretty strong as expected. What else did you have? Durable goods orders were pretty good. Michigan, final University of Michigan consumer sentiment data saw a slight upwards revision, but actually consumer sentiment's really bad. But that's only because of inflation anyway in the US. But the other thing that's been driving the dollar higher has been, generally, we've had quite a risk-off tone on Wednesday. There's a lot of concerns about the lockdowns in Europe. So that's helping the yen and the dollar, both safe havens. And we also had some hawkish commentary from Fed member Mary Daly, who pretty much indicated that she is open to the idea of speeding up the QE taper and open to the idea of multiple rate hikes in 2022. But anyway, guys, that is pretty much what has been driving this currency pair. So hope you enjoyed the video, and I'll see you all in the next one.